Have you ever wondered what would have happened if you had invested $1,000 in Meta back in 2018? Picture this. It's the start of the year 2018, and you've just invested a modest sum of $1,000 into a promising tech company named Meta, formerly known as Facebook. Fast forward to February 2024, and that same investment has blossomed to a value of $3,708. That's an impressive 271% increase from your initial investment, or an annual growth rate of 30%. Quite the return, isn't it? But what led to this impressive growth? What factors contributed to Meta's financial success? Today, we delve into the business model of Meta, the revenue they generate, and the financial strategies they employ. In this analysis, we will take a data-driven approach to understand the financial performance of Meta and what has led to its growth. Let's dive into Meta's financial health, starting with its revenue. In 2018, Meta began the year with a significant revenue base. Fast forward to 2023, and the revenue has grown to an impressive $135 billion. This notable increase represents a compound annual growth rate, or CAGR, of 19%. This growth didn't occur overnight. It was the result of a steady year-on-year increase, with a rise of 27% between 2018 and 2019, 21% between 2019 and 2020, and a substantial 37% between 2020 and 2021. There was a slight dip in the following year with a decrease of 1%, but Meta bounced back in 2023 with a revenue growth of 15%. The lion's share of this revenue, 99% to be precise, comes from Meta's family of apps. The remaining 1% is attributed to Reality Labs. Geographically, Meta's revenue is well distributed. The United States and Canada contribute to 39% of the revenue, Europe accounts for 23%, Asia-Pacific chips in with 27%, while the rest of the world makes up the remaining 11%. This consistent growth in revenue over the years is a testament to Meta's ability to adapt and innovate in a rapidly evolving digital landscape. It's the result of Meta's continued investment in its existing platforms and the development of new technologies to create a more immersive and engaging user experience. Moreover, Meta's diverse revenue streams and its wide geographical reach make it less susceptible to regional economic fluctuations, thus providing a level of stability to its revenue growth. In conclusion, Meta's consistent growth in revenue, its ability to maintain a high CAGR, and its diversified sources of revenue are all positive indicators of its financial health. These factors make Meta a potentially attractive investment for those looking to add a robust tech stock to their portfolio. Meta's consistent growth in revenue is a positive sign for potential investors. Next, we'll focus on Meta's profit margin and net profit. In the world of business, profit margins are crucial. They tell us a lot about a company's overall health, including how well they manage their costs and how effective their operations are. In 2023, Meta's gross profit margin stood at a robust 81%, which is identical to the 5-year average. This consistency is quite impressive, and it says a lot about Meta's ability to maintain its profitability, despite any market fluctuations or changes in the business landscape. Now let's turn our attention to Meta's net profit margin. In 2023, it clocked in at 29%. This is slightly lower than the 5-year average of 30%. While this slight dip might seem worrisome, it's important to remember that profit margins can fluctuate due to a myriad of factors. This could be anything from increased competition, changes in market demand, or even new regulations. So, what does this all mean for Meta's net profit? Well, in 2023, Meta's net profit was an impressive $39 billion. This represents a compound annual growth rate of 12% from 2018. This steady growth rate is a testament to Meta's ability to generate profit consistently. In conclusion, Meta's profit margins and net profit paint a picture of a company that has managed to maintain its profitability and grow its net profit over time. The consistency in Meta's gross profit margin and the steady growth in net profit suggest that Meta is adept at managing its costs and operations effectively. A high and steady profit margin indicates a company's ability to effectively manage its costs and operations. Understanding a company's assets and liquidity is crucial for any investor. Let's dive into Meta's financials. In 2023, Meta's total assets stood at a staggering $230 billion. That's a notable increase from the previous year, where the total assets were $186 billion. But what about net assets, you ask? Well, in 2023, Meta's net assets were worth an impressive $153 billion, which is a significant rise from the $126 billion in 2022. The equity to total assets ratio for the same year was 67%, slightly lower than the 68% in 2022. Now let's talk about liquidity ratios. The current ratio, which measures a company's ability to pay short-term and long-term obligations, was 2.66 in 2023, up from 2.2 in 2022. This suggests that Meta is well equipped to meet its financial obligations, which is a positive sign for investors. Similarly, the quick ratio, which is a more stringent measure of liquidity, was 2.63 in 2023, up from 2.17 in the previous year. This ratio further strengthens the argument that Meta is in a financially healthy position. But what do these numbers mean for Meta? High liquidity ratios, like the ones Meta has, indicate that the company has a good short-term financial health. It shows that Meta has enough resources to cover its short-term debts, which is essential for maintaining smooth operations. In simple terms, Meta's strong financial position, evidenced by its total and net assets, as well as its robust liquidity ratios, make it a solid choice for investors. It reflects the company's ability to generate profits and indicates a lower risk of financial distress. Meta's strong liquidity ratios suggest that it has a good short-term financial health. This is an encouraging sign for investors and adds another feather to Meta's impressive financial cap. Now let's take a look at Meta's cash flow and DuPont analysis. Meta's operating cash flow for 2023 stands at a staggering $71 billion. This is a significant increase from the year 2018, with an annual compound growth rate, or CAGR, of 19%. Meta's free cash flow for the same year is $44 billion, demonstrating a robust annual CAGR of 23% since 2018. These figures underscore Meta's strong growth in both operating and free cash flow. But what does this mean for Meta's financial performance? Well, to answer that, we turn to the DuPont analysis. This method breaks down return on equity, or ROE, into three components: net profit margin, asset turnover, and the asset-to-equity ratio. In 2023, Meta's ROE is 26%, its net profit margin is 29%, its asset turnover is 0.65, and its asset-to-equity ratio is 1.5. When compared to the previous year, we see some interesting changes. In 2022, Meta's ROE was 18%, its net profit margin was 20%, its asset turnover was 1.26, and its asset-to-equity ratio was 1.48. So, what does this tell us? The increase in ROE from 2022 to 2023 is largely due to a significant improvement in Meta's net profit margin. This indicates that Meta has become more efficient at converting sales into profit, which is a positive sign for potential investors. In conclusion, Meta's strong cash flows and improved net profit margin, as revealed by the DuPont analysis, suggest that the company has a solid financial performance. It's clear that Meta continues to be a strong player in its industry, maintaining robust growth and demonstrating impressive financial strength. The DuPont analysis provides a detailed view of Meta's ROE and the factors contributing to it. In conclusion, Meta has shown a strong financial performance over the years. Since 2018, the company has seen an impressive annual growth rate of 30%. Its revenue for the year 2023 stood at $135 billion, with an annual compound growth rate of 19% since 2018. Furthermore, Meta's gross profit margin for 2023 was a commendable 81%, consistent with its 5-year average. The net profit margin was at 29%. The company's total assets for the year were valued at $230 billion, with net assets standing at $153 billion. Additionally, Meta had a strong liquidity position in 2023, with a current ratio of 2.66 and quick ratio of 2.63. Its operating cash flow was $71 billion, displaying a robust annual compound growth rate of 19%. This financial analysis provides a strong foundation for making informed decisions about investing in Meta. And don't forget to subscribe and let us know which businesses you want us to analyze in the upcoming videos.